Hello, everyone. Welcome back. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I am very excited to be here with you this morning to take a fresh new look at the financial markets. I'm sorry for coming in very late this morning. I had to settle some personal issues, which was very, very important for me to sort before I began, or else I might be having issues while on live here. So thank goodness that things are quite okay right now, so we can just dive right into the business. So as usual, I have conducted a comprehensive price action analysis on all the financial assets on our watch list for this week. These are the USDJPY, the GBPUSD, and XAUUSD, and of course the USOilSPOT. And for those who are with me on both my TradingView and Telegram platform, you will definitely have gotten an update in that regard on how we are going to be managing our positions this morning. And in fact, we are going to be expatiating on that and see how we can understand the market better in anticipation of both the London and the New York session. For those who are new with us here that are just joining for the first time, well, you're welcome on board and glad to have you around. And what we simply do here is to come together as a community in anticipation of both the London and the New York session. And during this time, what we do is a follow-up detail on the videos I shared during the course of the weekend. So every weekend we get prepared for the new week, having a handful of financial assets to look at. So this session here, we basically focus on the 1 hour time frame. So if you do want to have a background knowledge of how we got to this 1 hour time frame, then I suggest you watch my videos on this instrument so that you can have a better understanding of what we are talking about here, and at the same time use it as an educational guide to understand how to use price action to identify potential trading opportunities. So you are highly welcome once again. So our analytical approach on the Forex Morning Mastery is basically focused on simple parameters such as trend lines, key levels, and of course chart patterns to uncover valuable insights into the historical price movement of the assets on our watch list. So with that being said here, please, if there are any issues with the sound, please let me know in the comment section. I would really appreciate your feedbacks. Your feedbacks are very valuable as it helps me to ensure that we have a better experience out there. So if there are any issues, please let me know so that I can do the appropriate tweaks to make things a little bit more better. So with that being said, let's dive right into the business for today. And as usual, the first thing we normally do is to check on the economic calendar, as by now we know that these fundamental factors often manifest on the chart in technical patterns and of course price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and of course specific technical patterns. And with this information, we can easily position ourselves in such a way that we can capture any potential trading opportunity prior, during, and even after the event. So for today, Wednesday, there were no high impact event coming in from the economic dockets on our watch list. But one thing I'm going to be doing as usual is to try to include the medium impact event, and let's see if there are any events to look out for from the fundamental aspect of the market. So I will include the medium, then include, let's see what we have here. Okay, so for today All right, so we do not have any high impact events, neither do we have any medium impact events. So we shall be relying basically on our technical skills to identify potential trading opportunities for today. I see your comment, Richard Blackett. Good morning to you. Thank you very much for your feedback. I'm very, very grateful. So let's dive right into the. Then before we go into, okay, I think that's all. Okay, so let's go into the business for today. And as usual, the first asset on our watch list for today is the USOilSPOT. The USOilSPOT has been doing pretty well since the beginning of the week, as we had both buying and selling opportunities, as you will see on the current market structure. So I would like us to run through what things were looking like at the beginning of the week and what led into the situation where we had our first sell position and how we got to buy the USOilSPOT yesterday's trading session. So at the beginning of the week, let me zoom this in a little bit so we can see. So at the beginning of the week, we were able to spot a range where price was confined within the $82.85 level and the $82.20 level to give us a flat channel to work with. And you know how we do it in this community. When we have a flat channel like this, we want to remain patient for a signal to come, which often come in the form of either a breakout or breakdown of that range to give us a signal of where price is likely going to go. Now, in addition to that flat range, remember we were able to spot a couple of rejections of the $82.85 level, which has been serving as a barrier for buyers to push price to the upside. And at every point in time, price gets into that structure or that level, we saw how sellers jumped in to negate all bullish attempts. We saw the same thing happen at the beginning of this week too, as well, as we suspected that we could see a reversal pattern with those double rejection of that area, which probably could come in the form of a double top structure. And remember, whenever we identify a potential transition of price action into a reversal pattern, the next thing we always do is to immediately identify the neckline of that reversal pattern, which of course we need the breakdown or breakout of that neckline to validate that reversal pattern. So we had the neckline, which of course shared a beautiful confluence with that support line at the beginning of the week, which was situated at the $82.20 level. So we were looking forward to the breakdown retest of that structure to capitalize on the bearish momentum, and of course we were part of that move as we rode the move to the downside. Remember, I told us all on Monday that for those who had missed out on the breakout, there is a chance if price comes back to retest that structure, then we could capitalize on the next downtrend. And of course, price action moved significantly well in our favor. I think we had over 200 pips on that single move. I think we had about, over 230 pips on just one single position. And remember, we had two positions. The second one at the $82.52 level, that one also moved about 170 pips. So we had roughly over 400 pips at the first half of the week, first day of the week rather, and that's a very interesting kickstart to the week, of course. And now we saw how price action respected that beautiful confluence at the $80 mark. Now let's talk about this quickly. Now, if you are with us during the live session yesterday, I laid emphasis on how important the $80 level is at this point in time, both from a technical standpoint and from a fundamental point of view. From the fundamental aspect, we all know how the OPEC Plus members have been trying to artificially increase the demand for oil by cutting oil production since the beginning of the year, and it appears that is beginning to dovetail into their favor. And one of their targets is to make the $80 mark a benchmark for oil prices, where that will serve as a platform for new highs. we mentioned that too. Then secondly, we emphasized the breakout of that $80 level last week, and we said that from a technical standpoint, that when price breaks out of a key structure such as this, we might likely see price retrace back into that level, and if the appearance of buy pressure resume around that area, we are going to be joining an uptrend continuation. And one of the things I said here yesterday, that if we are going to be selling, then we want to see price breakdown, retest the structure with a couple of rejection on our lower time frame to join the decline. But of course that didn't happen, as we saw buy pressure resume around the $80 mark to trigger another buy position, and currently price is running with about 270 pips if you had captured that move. Now, well done to you for being on standby to capture that move, and you all know what we do when price action moves significantly well in our favor. The next thing is to move all stop losses to secure the current buy position. So right now we want to be moving all stop losses, and from this current market structure, I'm of the opinion that anywhere below the key level at the $82 area, remember we had a key level in the video on the US Oil where we said we are going to be using that level to guide our trading activity, and that as long as price remains above the key level, we will look out for patterns and structures that will support the idea of buying, while if price breaks down the key level, we want to be looking out for patterns and structures that will support the idea of selling. Now, with a well secured position right now, what is going to be our next line of action? Well, the first thing we want to observe here is the fact that price is above our key level at the $82 mark, and as a result of this, we have no choice than to start looking out for patterns and structures that will support the idea of buying. Then secondly, it is quite obvious that price action has been caught within a range since last week Thursday. As you will see here, price has been caught within the $82.85 level, and of course the $80 mark area, to emphasize the level of indecision at this point in time. And in fact, we would need a breakout of the $82.85 level to join an uptrend continuation. Now, if we zoom into what is going on here, at least since the later part of the New York session, there is one thing you would observe. Price is back into that range we observed at the beginning of the week. Remember, we had this range marked out at the beginning of the week, giving us a flat channel to work with. And right now we can see for the past, let's see, 1 2 3 4 5 6 7 8 9 10 11 12 13 hours, price action has been caught within that range one more time. And if we take into consideration the impulsive move that led to that point, we are likely going to be seeing an uptrend continuation pattern. It could be called a flag pattern, a bullish rectangular pattern, where the breakout of the resistance line will be the signal we are looking out for to join the uptrend continuation. So with this situation in mind, it makes a whole lot of sense to continue to look out for buying opportunity from this current structure in the market. Now, there are two ways to which we can capitalize on that move. Now, it's depending on where you are coming from actually. So for those who have been profitable on the USOilSPOT so far this week, that is, if you have been part of the first sell position we took advantage of, and of course the second buy position we took advantage of yesterday, then of course you should be having over 400 pips at least in your kitty at this point in time. So we can afford to leverage on the profit we had made so far this week to test waters around the $82.85 level. So having your buy stop order above the structure, we are looking out for an uptrend continuation. And remember that it is very important you have your stop losses in place to protect your portfolio against any risk of. So I think anywhere below or around the $82.20 level seems most appropriate, which will be dovetailing to around 60 pips stop loss on this position we have here. So let's see how the market will play out from that area. So that's the perspective from those who have been part of this journey since the beginning of the week. And like I always say here, it's always easy for you, if you're already part of the journey, to risk risk leverage on the profit you have made so far to test what is around this area. However, for those who are joining us for the first time, or probably this is your first trade you are going to be taking on the USOilSPOT, so that means you're coming in from a clean slate. So at this point in time, we are going to follow the technical expectation of a breakout and then retest of structure before joining that move. Now, if the breakout happens, we scale down immediately to our lower time frame, where we want to look out for signs that sellers are finding it difficult to drop below or even stay below the $82.85 level, which of course would reflect on the chart as a retest or multiple rejection after the breakout of the $82.85 level. Then we can join that bullish momentum to the upside. And if there are any new setups or levels that comes up along the line that could give us more opportunity to maximize the potential of this bullish move, definitely I will be sharing them with you in the comment section of both my TradingView and Telegram platform. So that is how we are going to be buying the USOilSPOT for today. However, you know how we do it in this community. As long as we have a position taken, we also want to take into consideration the potentials of the sellers too as well. Now, with the kind of situation we have on this chart, what are we going to see here that will make us want to change our bias from bullish to bearish? Now, we are at a critical point in the market. It's a very crucial zone, as we have seen how this area at the $82.85 level had been a strong selling niche for participants in this market in the last 1 week. And if we are not careful, we can get caught up in any sudden reversal pattern around this area that could push price further to the downside. Now, we have seen how sellers come in here to negate all buying attempts. We saw the same thing happen around here. And then during the later part of the New York session yesterday, we saw the same thing happen. And right now, price is back into that zone. Now, are we going to witness a breakout of that structure, or are we going to see continued selling pressure here? Well, if that happens, that selling pressure persists below the $82.85 level, then I want to see price action break down the $82.20 and the $82 area to give me a signal that we are going to be going bearish. Now, we could have a sell stop order below that structure if you are already profitable, so you can risk some of the profits you have made so far this week to test what is around that area. Or if you are a conscious trader, you can wait for price to come back, retest the structure, continue selling pressure below this area, then we can join the bearish move to the downside. Now, there is a caveat to the setup if we join a bearish move. Now remember, we had a descending trend line which we figured out at the beginning of the week after connecting the series of lower highs. And remember, this trend line was broken yesterday, as you will see here, broken to the upside. And from a technical standpoint, we always expect price to come back and retest the trend line if the trend line is broken. Now, if price continues to drop to the downside, that is, if we have a breakdown of the $82-ish, and then we want to be mindful of how price would react to that trend line when it gets into that zone. So whatever happens around that area will determine if we are going to be getting ready for an uptrend continuation, or probably getting ready to add more position if price drops below that descending trend line to the downside. So we have to be very, very careful when we join that sell position there. So if you have any questions whatsoever as regards to this current setup, feel free to let me know in the comment section, and I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move on to the next financial asset. Good morning, Bill. Good morning. I see your comment. Thank you for checking in and trust you are doing very well out there. All right. So, in the absence of no questions, I want to assume that we're all on the same page. So, permit me to move on to the next financial asset on our watch list for today. So, the next instrument on our watch list for today is the GBPUSD. Very interesting scenario here. We have had both buys this week. We've had sell opportunities this week too, as well. But both scenarios never moved very significant, as it was just a short move on both occasion, and the profit we made on those moves were quite modest, not really anything significant to come with. And if you look at the structure closely, you will see how this market has fallen into an indecisive phase, as price action is currently trapped between the 1.279 and the 1.2700 area since last week Friday, which further emphasized the level of indecision in this particular market. And you know how we do it whenever we have an indecisive phase like this. We always want to wait patiently for price action to either break out of the resistance line or break down the support line for an opportunity to trade. Now, let's run through my commentary on the GBPUSD this morning. As for those who are with me on TradingView and Telegram platform, will definitely have gotten this update. So let's see what I said here this morning as regards to this current setup. So I said here that all selling positions were exited. Remember, we had a sell position yesterday after price broke down that ascending trend line. We are going to be looking at that in a moment. So generating a modest profit as buy pressure regained momentum. It is important to highlight that trading actions have been limited within a defined range since last Friday, specifically between the levels of the 1.27 and the 1.279. This emphasized the prevailing uncertainty leading up to key economic indicators, the consumer price index, the GDP data, and of course the consumer sentiment index scheduled for tomorrow and Friday. As the price remains within this range, we will exercise patience, awaiting signals in the form of a potential breakout or breakdown to identify potential trading opportunities. Now, let's go back into the live chart and let's look at what is really going on here. Now, remember, at the beginning of this week, we acknowledged that price action was finding higher lows. That was since last week, Thursday. And we had this ascending trend line, which we said we were going to be using to guide our trading activity for this week. And as long as price remains above that ascending trend line, we want to be looking out for patterns and structures that will support the idea of buying. And in fact, that was the reason why we had the buy position. We took advantage of here on Monday after spotting a double bottom structure just right above that ascending trend line that we saw there. Then we were capitalized on that move all the way to the upside. But interestingly, we saw how it became difficult for buyers to break through the 1.279, which of course reveals the presence of sellers around that area. And in fact, if we go a little bit further to the back, we saw that since last week Tuesday, that scenario has been persistent in this market. That is selling pressure jumping in around the 1.279, giving us a signal that this might likely be a seller's territory at this juncture in the market. So we want to be very careful around the 1.279, as that area is a very strong selling niche. Then we had our sell position, first sell position for the week after price action broke down the ascending trend line, which of course was a sign that the trend line may no longer have the capacity to continue to negate that bearish momentum. Now, with the situation we saw price move about, how many pips was that? We saw move about 60 pips before the bullish momentum became in. And if you had moved your stop loss like we always do, you must have been taken out with a modest size of profit, or at a worst case scenario, break even. Now if you look at the structure closely, you will see that since the breakdown of the ascending trend line, you all know that from a technical standpoint, whenever price action breaks down a trend line such as the ascending trend line we have here, we expect that some point in time price is likely going to come back and retest that trend line to incite a downtrend continuation. And it appears we have the scenario gradually unfold on the chart right now. As you will see, about 2 or 3 hours ago, we saw price action come back into that ascending trend line, did a couple of retests of that structure, and it appears sellers are trying to push price to the downside from the structure. Now remember that the 1.279 area and the 1.278 has been a very strong selling niche in this particular market. So we have seen sellers jump in around this area to push price to the downside, and the inability of price action of buyers to even come close to that level, for me, is a sign that we might likely be seeing a bearish momentum again. So in that regard, we want to be on standby to capitalize on that move. Now how do we do that? Now remember, at the beginning of the week, we have a resistant line here at the 1.27640. This was the initial point where price action, that was the highest point price action was at the beginning of the week. And right now we have a scenario here where price action has dropped below that level. So what are we going to be doing here? I want to be looking out for selling opportunities as long as price remains below the 1.27640 area. So if you had missed out on that one, well, we never planned it, but for some people, majority will have taken it anyway. But if you had missed out on that one, personally, I'm not in the trade yet, so we already have this breakdown, though we can't call it a breakdown yet, as this candle is still about it's about 30 seconds to go to close. So let's see how this candle is going to close. So if it closes below that structure, then I want to be scaling down into my lower time frame to look out for signs that buyers are finding it difficult to climb back above that ascending trend line, and of course the 1.27640. So this would reflect on the chart as either a retest or retest of the 1.27640, where continued selling pressure will welcome selling opportunities. Then ensure that you move your stop losses accordingly as long price continue to drop to the downside. So we still have levels where we can use to maximize the potential of this bearish move. And if price action goes on to break down the 1.2700 level, we will definitely be looking out for more selling opportunities. So at this point in time, things are looking very bearish. We emphasize how selling pressure have been observed around the 1.279, which is a very significant signal that it wouldn't make any sense to buy anywhere below the structure. So we'll continue to look out for selling opportunities as long as price remains below the ascending trend line going forward. Now, if we are going to consider buying the GBPUSD, I want to see price action break above both the ascending trend line and that resistant level of that channel at the 1.27900 area. So a breakout retest will definitely be a signal for us to join an uptrend continuation. So that is the only condition here that will make me want to be buying the GBPUSD at this point in time. Besides this, we continue to hold on to a bearish bias. Look out for more opportunities to capitalize on that move, as we have significant levels here that we can use to maximize the potential of this bearish move. So if you want to mark out these levels on your chart right now so that you can have a visual representation on your chart on how you are going to be taking advantage of this bearish move to the downside. So let's see how the market will play out in the next couple of hours. Trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So if you have any questions whatsoever as regards to this current setup, or you need me to clarify a particular aspect in my explanation, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move on to the next financial assets on our watch list. All right, so let's take this as a confirmation that we are good to go here. So since there are no questions, I will just move right into the next financial assets on our watch list. So the next asset on our watch list for today is the XAUUSD, and on the XAUUSD we still have not, we're yet to make significant profits. We were yet to replicate what we did last week, especially during the midweek, as we're still struggling to find a headway here. And despite the fact that price action has been finding lower highs, we are yet to see a lower low to really confirm that this downtrend has come to stay. I'm of the opinion that the reason why we are having this indecisive phase, let me call it at this point in time, is as a result of the anticipation of the high impact event coming in from the United States tomorrow and on Friday. Remember, we have the consumer sentiment index. We also have the we have the consumer price index, we have the consumer sentiment index, and we also have the producer price index, all coming up on both Thursday and Friday. And I think participants in the market are still being patient, waiting for data from this event to give an insight on where they want to be placing their bets. Now let's run through this current structure and how we have been managing our position on this financial asset. Now, if you look at the structure since the beginning of the week, we spotted a range initially around the $1,946.50 level and the 1,941 area to give us a flat channel to work with. Then we saw the breakdown of that range at the 1,941. Of course, I personally missed out on that one. I told you when this happened, it was late in the midnight in this part of the world, and for those who took advantage of that opportunity, well done to you for capitalizing on that one. So we saw price action drop to the downside. That was on Monday during our live session, and then we begin to notice the emergence of buy pressure around that $1,934.50 area. Let's run through that quickly. So we were able to spot something on the 15 minutes time frame, which we of course used to capitalize on that bullish momentum. So that was where we had our significant move for this week actually, and since that moment we are yet to really take a hold in this market. So on the 15 minutes time frame on Monday, we observed this descending trend line, and of course we shared this during our XAUUSD live monitoring window. We had this descending trend line, and of course we noticed that as soon as price got into this 1,934 zone, we begin to notice buy pressure resume around that area. So we said a breakout retest of that descending trend line will welcome an opportunity for us to buy, and in fact we were lucky enough to be part of that move, as we had about a 70 pips move Of course, we had multiple entries to us. I think we had three positions on that one before the bearish momentum began. So we were able to scoop in a modest size of profit on that single move there on Monday. So Tuesday, things were not really going very well for us, though we had some sell positions. Remember, okay, this was where we were as at yesterday's live session, and we were looking out for selling opportunities at the breakdown of the 1,930 level. And of course, it happened actually, but price didn't move that much. As we saw on both occasions, price moved about 60 pips before it came back into the entry point. It came back into the entry point, it moved another 60 pips again and went back into the entry point, taking us out at a worst case scenario break even. Now, one thing you would observe here along the structure is how the 1,925 level had become a new platform for buying pressure. Now, this has been going on for a while now. If you go to as far back as Friday's trading session, we saw buy pressure resume around that area. Then in the last 24 hours, we saw how sellers found it very, very difficult to break through that zone. And what this simply tells us is that this level may have a very strong memory for buying power. And for us to sell here, we would need price action to slice through the 1,925 level before we can start considering selling. So despite the strong lower highs we've been seeing in this market, remember since last week's trading session, I think since last Friday, we saw lower highs in this market as we connected it to have this couple of trend lines you will see on your screen right now. But the inability of sellers to find a new low is a concern for me, and as a result of this, I would indeed be very, very patient before jumping into any sell position at this particular juncture in time. So for me to sell the XAUUSD today, I want to see price action slice through the 1,925 retest of structure, giving me good confirmations on my lower time frame before joining any bearish move to the downside. So that is what I'm looking out for right now. So the bone of contention has now shifted from the 1,930 to the 1,925 right now. So that is what I will be looking out for to sell the XAUUSD for today. Now, in as much as we're looking out for selling opportunities, we cannot ignore the potentials of buyers too. So we also want to consider what to look out for here that will make us want to buy. Now, the first thing first here is we have already observed how that zone between the 1,930 and the 1,925 has been serving as a determinant of buy pressure in this market, at least since last week's trading session. Now, you can see what has been going on within this range. We can see how sellers have been struggling as soon as price action got into the structure, though it's looking very bearish, but this area has become a strong barrier as sellers are trying to gain their ground around this area. And I'm of the opinion that we might likely be seeing a huge traction probably tomorrow, but if it does happen today, we will of course want to take advantage of it. So at this point in time, to consider buying the XAUUSD, we will need price to climb back above our weekly key level, which is situated at the 1,930. And of course, you know how we use our key level in this community. As long as price remains above the key level, we want to look out for patterns and structures that will support the idea of buying. And one interesting thing about the key level is the fact that it also shares a beautiful confluence with that descending trend lines we identified earlier. So for me to consider buying the XAUUSD today, I would rather see price slice through both the descending trend line, and the 1,930. Then at this point, I want to start considering buying. Now, remember, we are not getting too excited here, as we will need confirmations to happen before we jump into any buy positions here. So as soon as we have the breakout of both the 1,930 and possibly the descending trend line, we scale down into our lower time frame where we want to look out for signs that sellers are finding it difficult to drop below the descending trend line and the 1,930. In fact, drop below and stay below that level. Now, this would reflect on the chart as price retesting the structure, continued by pressure. Then we can join that bullish move to the upside. Then we could maximize the potential of this bullish move as we have very interesting levels such as the 1,938, where if price breaks out of that structure, we are opportune to add more position to our existing trade. We also have the 1,941, and of course we also have the $1,946.50 level, all levels here to capitalize on an uptrend continuation if price action continues to find higher highs. So these are my views here on the XAUUSD. So you want to be marking out this level. So it's quite simple. Our center of focus for today is between the 1,930 and the 1,925, where the breakdown of the 1,925 is what we are looking out for to confirm opportunities to sell, while the breakout retest of both the descending trend line and the 1,930 is where we shall be looking out for buying opportunities today. So let's mark these levels out on our chart, as we will be needing them as a reference point to guide our trading activity for today. So if you have any questions whatsoever as regards to this current setup or my illustration, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move on to the next and the last financial asset on our watch list. Okay, so I see your comments. Good morning, Mansur Bangash. Good morning to you. Trust you are doing very well. You're asking that you find it difficult placing stop losses effectively. I would want to understand further what you mean by that you're having difficulties placing your stop losses. Is it that you don't know where to place them, or is it that you have technical issues with your platform? Which one? Is there a correct way to do this? Please, I would like you to expatiate on that one. I don't want to form conclusions in my mind on what you mean. So please kindly clarify so that I can jump in on that one. Okay. So I'll be looking forward to your clarity on that questions you're asking. Okay. So in the absence of no questions, I want to assume that we are all on the same page here. So I will be moving into the last asset on our watch list for today. Okay, so Mansour is saying that he doesn't know where to place a stop loss. All right. So in as much as I try as much as possible not to be a financial advisor online, if you had noticed how I explained my entry stop losses area, I always give zones. I don't give specific places where you want to place your TP target or your entry point or your stop losses. I will just give you a zone, and depending on your portfolio size, you can decipher where you want to place them. But let me quickly give you a hint on what to look out for. Now, I will use the current chart here as an illustration of what to do when you are trying to place your stop loss. Now, for instance, I'm talking about buying the XAUUSD above the 1,930, of course, above the 1,930, anywhere above the 1,930, we are looking out for buying opportunities. Now, in this kind of scenario, since we are buying, that means we are going up, right? We are going up. So that means we are going up. And the reason why we are having our stop losses is simply because whatever decision we are making in the market is an educated guess, because no one knows where the market is going. All we are just relying on is our hedge and our structural setup to give us an idea of where price action will be going. Now, the reason why we are having stop losses is just in case price is not moving the way we want it to move and price goes the other way, then we can be stopped out quickly, not to stay in a loss for a very long time. And from this kind of area here, where we want to be having our buy, that is at above the 1,930, in case price drops to the downside, where do we want us to get out of this trade? So in this case scenario, where is the lowest point here? The lowest point here is around the 1,925. That's the lowest point where price action has been so far. So if we are going to place our stop loss just in case price moves in the opposite direction, we want to have it around that area. And always remember that we also, while we are trying to place our stop losses, we also want to give enough room for price action to breathe. And if we are going to give enough room for price action to breathe, then we want to understand the memory of price action around that area. And if we go to as far back as Friday of last week, we can see that price action had played around this area for a while. So this gives us a sign that this area has a memory for price action. So we of course want to leave that space to allow price action to breathe before it goes up. So if you are going to be placing your stop loss, you want to be placing it way below that zone where price action has a memory for activities in this particular market. So if you're going to be placing a stop loss here, you want it to be anywhere below the 1,925. Now, when you place your stop loss, that will be dovetailing to about 50 pips thereabouts on this situation here. Now, if you place your stop loss, remember that to place your stop loss effectively, you need to have a position size, which requires you to have a percentage you want to be risking on every trade you are making. So if you're having a percentage you are risking, you need your stop loss for the pips for the stop loss, which you are going to input into your position calculator to get what lot size you are going to be using per trade. So that's another topic entirely. So it's very important you take all this into consideration while trying to place your stop losses. So I hope I made myself clear on that one, Mansour. And if you don't, I would suggest you read literatures on position sizing too, as well, as that will give you a better insight into how to do that effectively. So with that being said here, I will be moving right into the last financial asset on our watch list for today. So the next financial asset on our watch list for today is the USDJPY, and of course this is going to be the last instrument we are going to be taking. And in fact, if you look at the current market structure, things have not really changed since yesterday, as the price action has remained confined within that range we identified yesterday at the 143.350 level, as you will see here, to further emphasize the level of uncertainty in this market. And like I said earlier, this could be as a result of the anticipation of the major event coming in from the US economic docket tomorrow and on Friday. And as a result of this, we are yet to be taken out of our buy position. Remember, we had our stop losses way below the 142.950. Remember, I told us all yesterday to have our stop losses so that we can give enough room anywhere below the 142.950. And since yesterday, we are yet to be taken out of our buy position. So currently, we should be having a minimum of 3 positions running in profit at this point in time. Remember, during our live session on Monday, we talked about this range which was broken to the upside. Remember, we had this beautiful flat channel where price action was initially confined between the 141.990 and the 141.550 area. Then we saw the breakout of the structure, very beautiful signal for us. And in fact, that's our key level, which was at the 142.00 area. And when price action breaks out of our key level to the upside, we want to be looking out for patterns and structures that will support the idea of buying. And in fact, the market was so kind to us as it came back to retest that structure. So price broke out, retest the structure, and since that moment, we have continued to find higher highs and higher lows in this market. So we had opportunities of buying here at the 142. we bought at the 142.300 level, and of course we bought at the 143.350, which of course is still running at break even. The third position is still running at break even on this one. So it has been quite an interesting week for us on the USDJPY. Let's see how much. Okay, the first position is about 140 pips. The second position is about 108 pips, while the third position is currently running in a loss of about -3 pips. So let's ensure that our stop losses are placed accordingly. The stop loss zone still remains the same, anywhere below the 142.950 and the 142.600 area seems most appropriate here, as we need to give enough room for price action to breathe. Now, with the situation we have here, what is going to be our plans for today? How do we intend to manage our positions on the USDJPY for today? Well, it's a very, very simple setup here. We have a uniform uptrend pattern. As you see, we have noticed higher lows since the beginning of the week, and as a result of this, we have a couple of ascending trend line which we have marked out on our chart, and of course this is going to be a major parameter in guiding our trading activities going forward. Then, in addition to the ascending trend line, is this flat channel. As you can see here, price has been ranging between the 143.350 and the 142.950 in the last let's say the last 36 hours or so now, giving us an indecision facing this particular market. And of course, you know how we do it. Whenever we have this kind of flat channel, we want to wait patiently for price action to either break out of the resistance line to give us an opportunity to buy, or break down of the support line to give us an opportunity to sell. But with the way things are looking and the fact that price action has been very bullish in the last couple of weeks now, I want to see the potential of this range here to transition into an uptrend continuation pattern is very, very likely compared to selling at that point. And for the fact that price still remains above the ascending trend line, I'm still feeling comfortable in my buy position as long as price remains above the ascending trend line and the 143.350 level. So that is how we are going to remain bullish on the USDJPY for this week. However, if price action drops and breaks down the ascending trend line, which of course also shares a confluence with the 142.950, then at this point we are going to start considering selling, as a breakdown of that ascending trend line would be a clear sign that that trend line may no longer have the capacity to continue to negate any bearish attempt in this market. So a breakdown will definitely welcome a selling opportunity, but I would advise us to wait for a confirmation before joining. So once we have the breakdown of both the 142.950 and the ascending trend line, we want to look out for patterns and structures on the lower time frame that will give us signs that buyers are finding it difficult to climb back above the ascending trend line. And of course, this would reflect on the chart as a retest of both the trend line and the 142.950, after which we can join a bearish momentum to the downside. So that is the only condition here that will want to make us to sell the USDJPY today. Then there is a caveat to the setup here. Remember, we have this descending trend line figured out at the beginning of the week. Let me extend it a little further. So we are likely going to see how price would react to that trend line at some point in time. That is, if we do have a selling opportunity in this market, to determine if we are going to be going upward, that is retest of the trend line that was broken, or probably going to the downside if price breaks down the trend line. So these are my views here on the USDJPY. It's a very simple setup. All we just need to do is mark out the levels appropriately and wait for our structures to mature before jumping into any position at this point in time. So these are my views here on the USDJPY, and I do hope I made myself very, very clear. But if you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before I draw the curtain for today. And you can as well use that time to mark out those levels on your chart, as you will be needing them as a reference point to guide your trading activities for today. So I see your comment, Mansoor. Okay. All right. So I'm glad you found that clear enough. So let's see how that goes. And okay. So in the absence of no questions, I want to assume that we're all on the same page here. And it has been a wonderful moment with you guys today. And I'm very confident that we are well equipped and ready to take on the market, as we were able to simulate all the potential trading opportunities that could happen in this market using very, very simple parameters such as key levels, trend lines, and chart patterns to strategically position ourselves ahead of today's trading sessions. And if you have found this content helpful and useful in making your independent trading decisions for today, why not support the project and give the video a thumbs up? Your likes are very valuable to me, and in fact it helps the YouTube algorithm push the video to a wider audience of traders who may find this content beneficial to them. Let's grow this community. The more likes you put on this video, the more YouTube will push the video to a wider audience of traders. So thank you in advance as you do so. And it's on this note I would like to call it a day here, since there are no questions. So I look forward to seeing you again during the XAUUSD live monitoring window, which will be coming up in about 10 minutes into the New York session. I think I have the link here. Let me see if I have the link. If I do, then I will share it in the comment section. So you can just click on the link, click on the notify me button, and as soon as I come online, you will get notified immediately in real time. So let's see. Okay, I think I have it. Let's bring it up. Hold on a second, please. I'm trying to load up my the link. So I have the link in the comment section right now, so you can click on it and then click on the notify me button, so that when I come online, you will get a notification in that regard. So thank you very much for being around. I really appreciate, and I like you. Thank you for the likes. I really, really appreciate. If you had not liked, it doesn't cost anything. Just support. Please support the project. Thank you very much as you do so. So I wish you best of luck today. Hoping to see you in the comment section on the XAUUSD live monitoring window, and hoping to see you during the next Forex Morning Mastery tomorrow morning as usual. Do have a wonderful evening, everyone. Bye-bye.